traders, welcome to the TMT stock market strategy video for Thursday, August 25th. All right, so we did get a little bit of selling pressure, which was welcomed. The thing is, we did not see, or I didn't really see in my internals a lot of conviction. Although selling really was hitting hard in the precious metals and of course crude oil, and crude oil had a very big surprise bill when they were looking for a draw, so that actually helped the markets roll over too as well. And then we have Janet Yellen speaking in Jackson Hole, Wyoming on Friday, 11 o'clock Eastern. And so there's fears of some hawkish comments of possibly raising rates. And that fear, obviously, that when that fear does set in at these highs, people or I should say, investors and traders are deemed to take profits, which they should, going into a risk event. Usually that doesn't happen. So now we get a little bit of profit taking. Today's going to be very important. We have not had a string of 2 or 3 days, if you will, consistently in months. Now, if that does happen, then you're going to see some sell stops be run. And if that does happen, you're going to see a nice big flush in the markets. And I'm not saying just for today. I do think that a lot of the mutual fund managers and investors and traders will probably square some bets off going into a risk event like tomorrow, like Jackson Hole. But we do have some good trades, some good 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 charts that we were watching in silver. Again, like in front of you, a silver chart, very hard to keep. You have to be kind of short overnight. And when you have a very strong uptrend, being short overnight would be foolish to do. But again, we do. Some people do trade it, and they like to have some overnight exposure. And I mentioned that we had a double top formation. 50% would be the next target, and we hit the first target. We're hitting the second target now. That's the pattern formation in silver, which would be 1738. We're not that far away now, and the ultimate would be 61.8%. Now I'm liking this on. I'm liking these longer trades. Excuse me, long trades in the metals. They are, I believe, in a second stage bull market, so this is normal for the week longs to get shaken out. I like to start looking at longs in the silver at 61.8% retracement, even way down to here. Even if we can get down to the 1620, 1680, or even let's say 1684, anywhere in that 16 handle would be it would entice me to look to get long. What happens in precious metals, guys, you got to be careful, because when you get a 1-2 day move like that, you think it's done. Then you get the ultimate flush, which really just comes down and takes everybody out. So watching that for today, I'm watching the GLD as well. You can see GLD didn't get hit as hard, but silver does move faster. You could see we've been showing that double top. We're watching that the secondary move here was waning. You could see that here, that we had very bearish momentum readings in our oscillators and our momentum oscillators. So you could see that here. So 38% is going to be that first target, and again, that double top measures way down here. So 119, 120-ish would be interesting for the GLD for some buy-ins. Here's the GDX. Again, GDX does move much faster. It's a lot more volatile than the GLD. You can see here, excuse me, you can see our momentum indicators, our MACD and RSI. We were talking about this, how it started to roll over. And right here, we're looking at the first target being met. Second target's only pennies away. That's a 50% retracement of 26.29. And of course, that 25.20 area, anywhere in 25-ish, I'm looking for to start looking to possibly buy the GDX. Okay, looking for long trades. But again, you're not catching a falling knife. Let me clarify that too. When I mean buy, I mean we're going to be looking for a price to get to this point, and then once it does, we want to see some stabilization. We want to see some backing and filling, and then start taking out that backing and filling horizontal area. When it does confirm, that's when you start looking for a buy, when it starts going back up, not as it's going back down again. Now, for position traders, it's a little different. They'll put some dollars, a point of how much dollars they're going to invest, and they'll buy on weakness all the way down to the amount of shares that they're allocating. So it's a little bit different that way. But as day traders, you want to wait and confirm that trend. All right, now let's get some key levels here, guys. These are key levels that we're looking for today and tomorrow. All right, now we had touched this area here of 217.50. That's going to be the break. Yesterday's low is going to be the break, and we're going to look for the next support area right down to here. Okay, let me get the crosshairs over. 214.50 is going to be your area. 217.50 is going to be your hold that the line in the sand will be drawn 217. Let's call it 217.20. 217.20 on a closing basis. It has to hold. Otherwise, we would get to the next support area of 214.50. There's a little bit of support in the 215.50. All right, we can see that horizontal channel. Let me get that out there. There's 215.50 and 214.50. Those are the two that needs to hold. Now tomorrow's already Friday, so I'm not sure if both of these would be tested, but rest assured you probably get that gap filled down here down to the 216.50. So you got $3 in here of support: 16.50, 15.50, and 14.50. Okay, those are your key levels going into Friday, today, Thursday, Friday, and into next week. All right, and I'll show you that bearish rising wedge, which is still valid, believe it or not, still valid. Measures down to the 215.95. Okay, that is still valid. We have not taken out this high here, so still valid. And let's see if we get down there today. All right. Next is going to be transports. Transports held up pretty well. They actually just sold off towards the end of the day. This is still bullish, and this is what I'm watching here to see if we get back down. We break back down into below the trend line, and of course below that horizontal trend line. IWM daily, big pivotal area is going to be the 21 moving average, which is 122.50, and then 121.80. 121.60, excuse me, is going to be that next area. These are next two big areas in the daily chart. Now, in a premier video, we have actionable trade areas of support and resistance where you guys can trade off of that are much more well defined. So you got a lot more levels to trade off of. So come check it out on the website at www.tradingmarkettechnicals.com. And this one here, 116.30, you could see hit it right to the penny. We showed you this before. This is going to be key and pivotal. Next area would be that gap fill area of 116.65, and then ultimately test would be the proprietary price channels of 114.60. Guys, I hope it helps. Have a great day. Let's see what happens. It's going to be a very important day today for the markets. Take care.